Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo, not the video, for the 30th of May here in 2023. Couple more days until we have June, and Friday is going to be the jobs report. So in tonight's video, we're back from the holiday. We have a little shortened trading week, but we do have some things, especially earnings, and a few news events and the debt ceiling on the docket. So let's get started. Right now, we're looking at the S&P, and there's not really any changes. Changes meaning we're still in the position that we have a better reward. We'll call that the reward pathway, reward. And this is the risk pathway. So there's not a lot of changes on the S&P. That means the other markets, looking at the Dow actually, is seeing a sell swing or sell side activity. We're going to get there. We're going to get to tech. But right now, what you're seeing in the Dow is basically what the S&P should be doing, but it's not at the moment. And in the Russell, that's your weakest index. That is your small cap index. And you see that where we are, just looking at comparison, on the sideways trading range of the Russell, it's a little closer to the bottom. And it never quite got to the upper end of the trading range like the S&P did. So that's what is going on, at least in terms of the Russell, the small cap. And think about it like a wrestler. It never quite got off the mat. Got off the mat as in it stood up, got hit again, stood up, got hit again. This time the Russell never got off the floor. But we do see the split in technology. Not only is it off the floor, but it's through the roof. Through the roof is the Nasdaq. Because the technology sector is strongest, and in large part, a new trillion-dollar company has emerged, and that's NVIDIA. So NVIDIA pushed a little bit higher. It did reverse in the afternoon session, but it was up around 6% earlier. Qualcomm ended the session up 6% or 5% itself. Tesla was a gainer. Netflix is up another 3% in today's session, and the other stocks are in the mix as well. One that we will be talking about, which had a little reversal in today's session, all the way back, was Broadcom. So we'll come back to Broadcom in a little bit, but it was up, believe it or not, 10% in today's session. That means this stock from low to high was up $100. Don't believe me? I found it hard to believe myself. Market opened around this 800, or at least closed Friday 800, all the way to 900, and then all the way back down. Let's actually start there as we talk about the week ahead. So a quick little note, something I did in my afternoon session, was the earnings and the news. And this is simplified. A lot more to it. But Wednesday is going to be Salesforce.com. That's CRM. U.S. Purchasers Managers Index or Purchasing Managers Index, PMI. It's going to take place on Thursday. And you may have some positions in Lululemon. Little news and headlines on it over the weekend. And then Broadcom, AVGO, is going to report earnings on Thursday. I think a big thing that's going to happen is not on the chart, and it's the debt ceiling. I won't be talking about it in today's session, mainly because, as of this recording, it seems like it will be passed. Neither side's happy with it, but such are compromises. Nonetheless, if that goes through the House and the Senate, we've got that off the table. And we'll be focusing on the Fed, Federal Reserve, inflation, economic reports, and the big one this week is going to be the jobs report. Yes, I had to double check this just to be sure. It's going to be June this Friday. So we will be pushing quickly into the next month. So before we get there, just looking quickly at some earnings again. CRM are going to be Salesforce.com will be the next stock up for the earnings play. It's actually making new highs. That'll be the next earnings to take place. Behind it is going to be Broadcom. So Broadcom, there it is, has earnings on Thursday. And the other stock that's not on the S&P 100 list, that's what I watch, that's what I trade my swing trades, is Lululemon, which had a sell swing, if you played it, down from this $3.90 per share. And why is that significant? You've actually got to push back to the middle. Remember your trading ranges. You got the lows, which are buys, and the shorts or the highs, which are shorts. So that most recent play was just shy of $3.90 per share, all the way back to the middle, which is about $3.40. Lululemon will have its earnings on Thursday. So that's one stock to watch, just kind of pulling it back even beyond that. Why was that level important? Because it's a lengthy trading range. And again, if you're playing this for a little duration trade, that was shorting up at those highs. Doesn't always go magically to the downside. Stocks can break, but eventually do return. Think about this as like gravity or a little distribution, where you've got the overbought, call that overbought or expensive, and the oversold or the cheaper parts, and this would be considered fair valuation. When a stock is over fair valuation, it does tend to come back to the mean being the middle. So Lululemon, all the headlines, all the yoga pants, and all the good and bad press is right back to fair valuation. And that's around $3.35 or so per share. So what else is going on in the market? Crude, seeing the weekly chart, did take another sell swing activity to the downside, peeling off about 4% in today's session. And that was a trend day to the downside on the intraday chart. We'll pull that up quickly. There's your trend day. Looking at a 1 minute chart, there's the bigger trend day. But on the weekly, that's getting back to support levels. That's to be expected. If inflation's coming down, we hope inflation's coming down. We hope the Fed doesn't have to raise rates that much more. We ought to see oil go down to lows as well. So that's where we're seeing oil push to those lows, breaking its support level on the daily chart. Speaking of, we have the bond market. We did have a push and a big sell swing through the 2020 all the way down to the bottom in 2022. And there's a trading range there as well. So think this through with me. If the bond market has a rally back to the mean, there's that little distribution. Again, there's the overbought, there's the oversold, there's the fair valuation. If the bond market does push itself back to 104, what might that suggest on the other side? Let's talk about the spiders. That might suggest the spiders go down. That's the opposite of the bond market going up. Bonds go up might mean the stocks go down. So we've seen this in the last few weeks or the week or so, where lots of lines on the chart, but just focus on this. 10-year Treasury yield has boosted itself from 3.4%, 34 means 3.4%, back to almost 3.9. And again, we're going to keep our eye on the Fed Watch tool and what they say about their June 14th meeting. It's going to be a couple of weeks away, but we're going to move away from this debt ceiling talk and into how high, quarter basis point or none at all, will the Fed raise rates at their next meeting. And of course, economic indicators, earnings, and all of that, especially the inflation data, will factor heavily into their decision. So before we go, let's finish up with some of those strong stocks getting stronger. This is just a 52-week high scan. One of my favorites for finding swing trade candidates, but it is the stocks in the S&P 500 that are making new 52-week highs. And they're candidates to buy on a pullback. They are considered, to me, to be strong stocks getting stronger. And they include Apple, Microsoft, Nvidia, Meta, Broadcom, Salesforce.com. Again, these have earnings coming up. AMD, Advanced Micro Devices, Netflix, Applied Materials, and the others down the list. And these again represent strong stocks getting stronger. There's 20 of them. That means that 20 of the stocks in the S&P 500 made new 52-week highs in today's session. But on the other side of the market, there are stocks making 52-week lows, and there's a decent amount of them in today's session. So just the other side of this is not 52-week highs, but 52-week lows. These stocks are showing relative weakness, and they may continue to be on the downside, especially if the market takes a downside swing in the next few weeks. These would be ones to watch on the short side. Bristol Myers Squibb, BMY. We have Elevance Health, Target. I have to pull Target onto the chart. Just a quick mention. It's had some headline, but it also is continuing a downtrend and just broke its support levels. That's after earnings took place last week. Then we have General Dynamic, GD at new lows. Triple M, which is continuing its downswing. That is your daily and weekly. That stock's gone from almost 200. It's been cut in half. From 200 down to 100. We're under that at the moment. Dollar General has continued to push to new lows. Right there, its earnings are coming. And we'll look at a few others. Keurig, Dr. Pepper, or just KDP. Others are Dominion, Cisco, and the like. So you can always freeze the screen or pause the video on which stocks are making 52-week lows. Those are your weak candidates. And the other side's which stocks are making 52-week highs. Those are your strong candidates. And a lot going on in this week and next, even though it's a shortened holiday week. As always, be careful and safe. This is Corey Rosenblum with tonight's Theo video update for May the 30th, 2023.